Hello and a very warm welcome to this extra special session brought to you by FinCap Group. I'm Oli Barrett and it's an honor to be your host for this session all about sustainability, ESG, the words on everyone's minds, but what we're interested in today is deeds, not words. FinCap Group, if not known to you already, are the trusted advisor to ambitious entrepreneurs. I've seen firsthand how they've helped people raise money, list their companies, and exit their businesses as well. So whether you're tuning in live or on catch up, whether you're doing this from your home or your office, you're very, very welcome. And we've got a brilliant lineup of guests, but the most important guest of all is you tuning in. I'd like your questions as we go through today to try and cut through the noise, to see through the fog around sustainability and really understand how it impacts the bottom line. I've got a brilliant group of guests. Let's waste no further time in bringing them all together for the first time. Good morning, everybody. Good morning, Simon, Jenny, Rob, and Chris. Very nice to see you. Let me tell you who's here this morning. Simon Alsbury, morning, Simon, is the co-founder and chief exec of Energize, which is a purpose-driven business on a mission to support people to become net zero. Morning, Simon.
Morning, Ollie. How are you doing?
It's very good. It's lovely to reconnect with Chris Forbes, a true entrepreneur. Dished out many a Great British Entrepreneur Award to you, Chris. You are the co-founder of the Cheeky Panda with your partner, Julie, now ranked 6th in the UK's top 100 startups. You're on the Sunday Times Fast Track and you're making a whole range of sustainable products. Hello, Chris. How are you doing?
Good morning, Ollie. How are you this morning?
Yeah, really well. It's lovely to see you again. Thank you for joining us. Jenny Galbraith is the ESG director at Inflection, a private equity company investing in a whole range of companies. Hello, Jenny.
Hi, great to be here.
Thanks for being with us. By no means least, Rob Pitcher, no stranger to these screens, a friend of ours, is the chief executive of Revolution Bars, the Revolution Bar Group. He joined as CEO in 2018, and he has over 25 years of experience in hospitality. Rob, welcome back. How are you doing?
Yeah, I'm good, Ollie. Hope you're well too.
Yeah, it's great to bring everybody together. I'm going to ask Simon in a minute to help us set the scene, but why don't we get a little bit more colour about each of your organisations? Chris, just remind us, growing the business internationally, everything I think of toilet roll, I think of wipes, just remind us about the business.
Yeah, so the business was created in 2016 with from our back bedroom with the idea of using bamboo, which is the world's fastest growing plant, as a more sustainable resource than trees. And from there, we've had a number of successes to take us to where we are today, where we've got an omni-channel, and then we've got different categories. So the categories we play in is household, which is like toilet tissue, kitchen roll, facial tissues, and straws. We've got baby, which is nappies, baby wipes. We got beauty, which is beauty wipes. And then we do professional ranges to bars, restaurants, hospitality. And today we're now sold across 25 different countries and we've got an 8-figure turnover.
Congratulations. Does that include Revolution Bars, Rob Pitcher?
I don't think it does, actually. I was just thinking that. I've just written that down.
I know you were.
Sure,
so I thought we'd do a
does,
deal if that's all right with you. We'll come back to that. Jenny, your portfolio is incredible at Inflection. Just give us a flavour and tell us your sweet spot, industry or amount that you're investing.
Yeah, absolutely. So we are Europe's leading mid-market private equity firm. We've got quite a diverse portfolio, looking at tech, business services, financial services, through to consumer, healthcare and industrials. So really varied portfolio there for me to get into. And that's across buyout funds, partnership and also an enterprise fund. So we're pretty busy.
Fantastic. No, welcome. Thank you. And we want your reflections as we go. And by no means least, Simon, founder of Energize. In fact, why don't we just have a one-to-one with you, Simon, to help set the scene? Thank you to you three. Have a seat. I'll let Chris and Rob do their deals backstage. Maybe Jenny can get a piece of the action as well. Tell us a bit about Energize. And by the way, congratulations, because you are newly partnered with and newly invested in by FinCap Group. Tell us why that deal matters, but more importantly, tell us what you're up to and how you're very valuable to your clients.
Thanks, Ollie. It's good to be part of today. Let me just, I suppose, a bit of background to Energize first. I'll talk about the FinCap piece as a natural flow from that. So founded 14 years ago by myself and Tamsin, my wife, it's a not dissimilar story to Chris. We found it from our dining table rather than the bedroom, but very much entrepreneurial spirit. We are a team of 35 today, helping organizations on predominantly net zero, but sustainability in a wider sense, very much about being a partner to organizations, helping them figure out their strategy and approach to all these topics and drive things forward across the ESG landscape, a particular focus on the environment and within that net zero, partly because that's the greatest focus, I suppose, in terms of activity, but also because it's our background. Historically, our focus was energy management. So.
Got it. So it sounds like on the one hand, you're helping them understand, what needs to be done. You're helping them get clarity on their own businesses, and then presumably you're helping put things into action as well. What's a real example of that comes to your mind?
Numerous ones, one of which is on the call, but I'll use another example as a journey. I think your various organizations kind of will go along their journey, but if I take an organization I think many people would be aware of, we support Kier, the construction group, and have done for a decade, and they've got now kind of some very strong carbon management activity going in place in terms of their net zero commitments in what's a challenging sector. And their journey, like many others, would start with the kind of early days of, okay, it's about understanding our carbon footprint and those pieces, but then it evolves into looking at what benefits you can derive for the business and for society in terms of reducing your emissions, but also kind of understanding how that can help you create value in the business in terms of relationships with customers. People want you to do that. It matters to employees, so there's a point around kind of employee engagement, and it's helping organizations with that. And ultimately then looking at the disclosure agenda and rolling out to kind of there's an investment lens on it as well.
Right. Well, we're going to come on to that. But that's a very interesting example from construction. In a minute, we'll bring everyone back together. But why don't we quickly just gang up on Rob and Chris behind their backs? Simon, what's the one question we should be asking them today? You get to ask these questions all the time. Where's the really trickiest question of all?
I think the challenge any business has ultimately behind this is you've got to balance your principles, like the ethics that you're wanting to run your business by, your purpose to make sure you're not diluting that, and the profitability of the business. And I think ultimately there is the difficult one for any decision maker is how are you squaring off the compromises you have to make in that journey.
Got it. Right. So, all right. Let's bring them all back together. Welcome back, Jenny. Chris, it feels like one of those game shows where you take your headphones off, doesn't it, really? Now then, all right, Jenny, stand by, because I've got questions about how you evaluate companies in a minute. But Chris and Rob, I was speaking to this incredibly smart person recently, and they asked me to put it to you that you've got to somehow square your purpose with your profitability and your principles. And in doing that, and I'm paraphrasing because they were pretty erudite, I've got to tell you, compromises may have to be made. Put it as bluntly as you like. Talk to me about those compromises. Chris, then Rob.
Rob, do you want to go first, or do you want me to take this?
No, Chris, go. That's very generous.
Okay, all right. So
throwing the towel.
All right. So when we started this business, you can't get to big bang day one, right? So you've got to make continuous iterations. And when we started it, we were like, all right, bamboo's a better material, but our toilet tissue was wrapped in plastic, because only when you get to a certain scale does that actually you get economies of scale to change it to paper. And then by about 2019, we got to the sort of size where we actually went, let's change our packaging so it's more environmentally friendly. And this is now the packaging that we have.
Lovely.
But it was a big risk for us because this was our plastic packaging was our biggest seller, and we didn't know if consumers would adopt. But we plowed ahead with it anyway, and thankfully we now sell a lot more of the paper one than we do the plastic one. So it is for us, it's continuous iteration, and will never be the complete article. But as long as you kind of have goals in terms of like where you are today and where you can get tomorrow, and you can take bite-sized chunks along the way, then you'll actually get to the end goals.
Got it. Right. Let's get your take on this, Rob.
Yeah, Ollie, look, I think you have to balance the decisions, and by that I mean short, medium, and long term, because most of this is an investment, okay, and some of that investment you'll get more or less instant payback on, but a lot of it is long-term investment. And we funny enough, we partner with Simon, so it was interesting him posing that question. But yeah, on a day-to-day basis, where I'm going to allocate my resources, be that human resources or be that capital in the main, and we've had to balance that off. And thankfully, we've brought the board on board with this journey. They understand we employ a very young workforce, and it's super important to them. And if we're going to be here for the long term, then investing up front. And look, there's no real first mover advantage here because it is an investment in the future. So unfortunately, you have to move first, but you almost do that from a moral standpoint and say this is the right thing to do for the planet. In the long term, it's the right thing to do for the business as well. And over time, your employees realize that first, and our guests, as we would say, realize that second. But yes, then that is the long-term benefit that will come through.
Right. And that's a clear connection there with talent attraction. What about the low-hanging fruit, the quick win that does the right thing, but also returns the financial benefit in the short term? Is that the sort of, is there no such thing?
There absolutely is. And talking of low-hanging fruit, something that we've talked about in the past is, we looked at some very simple things that could take cost out in our business that would not impact on our guest proposition. So we sell cocktails for a living. That's what we do. The number one selling cocktail in the UK is depending on whether you're at Marks and Spencer's or not, it's either a passion fruit martini or a porn star martini. We were bringing to this country an excess of 36 tons of passion fruits, which were being air freighted from South America. By simply removing that out of the drink and putting a rice paper disc on the top in the printed with a passion fruit, we've saved 100 tons of carbon. So immediate results. But what that actually led to was that another one of our bar team highlighted, well, actually, we use an awful lot of pineapples, most of which are just for their leaves. We import 140,000 pineapples. What I never realized was that 100,000 of them were just for their leaves. So with some very simple changes, we've been at it again. We're in the middle of stopping importing 140,000 pineapples. So yes, you can make immediate changes that remove cost out your business and also do the right thing for the planet.
Fantastic examples. Thank you, Rob Pitcher. If you're just tuning in, that's Rob Pitcher, Chief Executive of Revolution Bars, mixing it up. Jenny, what are you making of this? Tell us a little bit about your reflection and, more importantly, your work. I want to know how you evaluate investments based on their sustainability and, crucially, how you support the companies you've invested in. Help us paint a picture.
Yeah, definitely. And I'm going to dive in on that last discussion, if that's okay. I think we shouldn't be positioning this ever as a compromise. Yep. This isn't a trade-off between purpose and bottom line and principles. We should be talking about shared value, and we should be talking about growth, because that's what ESG is about. It's not about a compromise. If we think about it as a compromise, it's never going to run, because we're always going to choose the bottom line straight away. And I think, as Rob has started to illustrate very well then, I think sometimes we think too much that this is a short-term investment for long-term gain, and that's not right at all. You can have yes, there is investment up front, but there's also a lot of short-term wins a company can have from ESG. Whether that's through resource efficiencies, brand, everything else.
All right, Jenny. Well, let's pause only briefly because I want to hear more about your work. But your assertion there, very clear. We can't position it as a compromise, because if we do, we'll always choose the bottom line. Okay. Yeah. Well, a viewer might say, well, you will, Jenny, because you're in private equity. Give the entrepreneurs of the world a little credit. Chris Forbes might choose to do the right thing, even though it costs him in his pocket for 1, 2, and 3 years. What do you say? And Chris, feel free to come in, but aren't you shortchanging some of our main change makers there a bit, Jenny?
No, I don't think so at all. And I think entrepreneurs are, at the force of this. These are the people who are getting it right from day one. There's a lot of larger organizations who have been pondering over this for years, and quite frankly have stalled the race. But what I'm seeing in the entrepreneurs world is people who are doing this from day one. They don't have an ESG strategy that's put in. It's part and parcel of what they do, which is why, for me, it's absolutely not a compromise. It's just how you do business.
Okay, and only in the interest of pulling on it a bit further, Chris, come in, because I get the sense here.
And I think it's part of the job of the entrepreneurs to do this solution selling on this as well, right? Because I mean, like sometimes too big to change is one of the things I come across within large companies. And if we're sort of speaking to a 30,000 person organisation about changing their toilet tissue, they'd be like, it's going to cost me an extra £100,000 a year to switch to your toilet tissue. And I'm like, well, actually, you've got something to put into your ESG report. You know, that could add top line value in your share price of 5 million. So actually the ROI that you can actually get, your client engagement improves, your staff engagement improves. And if I'm just talking about toilet tissue or hand towels, I'm not really actually doing this. I'm not actually doing the service about what I'm doing. I'm actually talking about an environmental change to make a more sustainable planet. And if the entrepreneurs have those good discussions, I think kind of you can find the budget and you can find the value.
Okay. Now, Jenny, I want to hear more about your portfolio, but Simon, help me out here, because I fear I got a bit stitched up by whoever I was talking to earlier. You've sent me right into the path of a very, a rightly offended Jenny Galbraith. So tell us what that person might have had on their mind, because I sense that you see this compromise thought when you work with your hundreds of clients. Help me out.
Yeah, I think I don't necessarily disagree with the fact that ultimately I think leadership on this means that you do have to point in a certain direction of travel in terms of what Jenny's highlighting. But I think the question I'm raising is the lens through which it's seen in most boardrooms, and that's the challenge. I think
that is a critical distinction, 100%. So it's almost educating the board, as Jenny's saying, to be about value creation. So Simon, much more from you in a minute. Jenny, tell us how this plays out when you're evaluating who to invest in.
Okay, so I think traditionally due diligence has been very risk-based, right? So you're looking at, are we potentially buying something that's got some contaminated land? Are we potentially buying something where, there's a cultural issue that might be hard to overcome? And that's been incredibly useful, but it's been very almost backward looking. And like I say, risk-based, it's making sure that, there's no huge red flags as we're going in. But increasingly, Inflection and other private equity firms, we're not the only ones doing this, are shifting that to look more at value. And it's not a binary, will we buy, won't we buy? What it is another lens for us to think about how we can create value in that organization and what's the opportunity. The opportunity may be looking to shift a laggard to a leader, or it could be something quite niche and their R&D, we could shift a different material. So I think it's moving, like I say, from that binary risk-based approach, are there any red flags, to something that's a lens for us to view and think about what that investment thesis is.
And that to me, Jenny, shows sort of leadership almost across the sector. Let's pause briefly on the risk point, because the risks that you're evaluating have evolved and broadened. Talk a bit more about that, particularly in the context of sustainability.
Yeah, so talking purely from a risk point of view, I mean, historically, very environmental focused. I should add at first, before, we don't have a one-size-fits-all due diligence approach. So you would do what's called a materiality assessment to begin with. You'd be thinking about what are the key issues for this business and what do we need to dive into. But now we're shifting much more away from that focus on environmental issues to thinking more about supply chain issues, bringing in social issues, particularly if we're looking at buying something that's got overseas operations. What are the workforce practices there? How are they being managed? Is that a risk to the business? Not just are they beating regulation, but what can we do to move them on? Conscious as well that there's a lot of regulation coming in, particularly from the EU, that means companies will need to be transparent on that.
Well, I'm pleased you mentioned that, because I've got someone to give us a quick pep talk on that. Briefly before that, though, Rob, Jenny raises a very interesting point that you could have your own house impeccably in order. That doesn't mean your supply chain has. How do you quickly and carefully evaluate that supply chain particularly starting, for someone tuning in, suddenly realizing the hidden risks that they're facing?
Yeah, so that we did a science-based target, and through that process established that I think 11% of our emissions were direct, so scope 1 and 2, and 89% were down our supply chain. So we can be fantastic in the bit that we're doing, and we've done a lot of work. We've reduced our energy consumption by 30% since 2017. We've been doing a lot of really good things, but unless we get the supply chain working with us, then we're having not the impact that we need to be having for the planet. So we've established as part of our tender process document very clearly, it's right up there as number 2, is you need to show us your sustainability credentials and lay out your plan if you want to work with us. So we've put all our suppliers on notice that by 2025, if you haven't got all that in place, then you won't be working with us in effect. So and that drives the final decision making in the tenders that we've just been doing recently.
Right, I can see Simon Alsbury sort of beaming like a proud head teacher here. This is music to our ears. Chris, give us a quick glimpse at Cheeky Panda's supply chain and something you've done that's made a difference because you've seen the knock-on effect it's had.
Yeah, I mean, I think we're different to a lot of businesses. We're green at our core, and when you look at ESG, sometimes it's just on the social governance side of things rather than the environmental, where we major on the environmental. So all the bamboo that we source, it's all FSC certified, so that's independently audited. It's all cooperative farming, so it's all give back, and then we're a B Corp as well. So we're cruelty free, we're vegan certified. So if anything, we've got too many certifications showing the impact that we do. But that gives us comfort. And then we've done LCA reports in terms of complete life cycle analysis from cradle to grave. And we can show our end users, and which we've done recently when we just implemented it across the oval, that we're saving them about a ton of carbon per month.
Right.
On such a simple switch.
So for example, Chris, where is most of the bamboo that you source and use grown?
So currently we source it from China,
right?
Because that's where the majority of bamboo is grown.
Right.
And now we're getting into vertical integration. So this year we're hoping that we can start manufacturing in the UK.
Yeah. Okay. But before you do that, forgive me, Chris, before you do that, how confident are you that how the toilet roll gets to the bottom in England is sustainable, or you say that's not our business?
No, I think that it's very much our business. I mean, I think that a lot of people don't understand the process of manufacturing tissue, and I would always say that the tissue that we're using currently, it's not coming from Sherwood Forest. It's coming from Scandinavia, it's coming from Canada, it's coming from South America, and actually the process of transporting the pulp isn't the large part of the carbon process. The large part of the process is the pulping and manufacturing. And what we've seen, like global supply chain, what we've seen in Europe, for example, with the war in Russia, is that the energy costs on pulp has gone from £100 a ton to about £600 a ton. Yeah. So actually having a diversified supply chain actually helps manage risk as well. But we can actually say, because bamboo produces more carbon, absorbs more carbon, produces more oxygen, we're 65% less carbon cradle to grave than our equivalent trees. And I think if you can if you're sitting off against a sustainability officer, and then you can actually sort of, show the data behind the facts, and I think that gets everybody very comfortable very quickly.
Got it. And by the way, Jenny, I mean, these are leaders that we're listening to here, Chris and Rob, aren't they? I just wondered to what extent, I'm not asking you to cast judgment on your whole portfolio here. I just wondered to what extent they're the outliers. Because it's all very well to have poster kids, isn't it? Give us the reality check from the chief execs you speak to, because we're hearing real thoughtfulness around supply chain, sustainability, investment in doing the right thing.
I think I agree. Definitely leaders, but not the outliers. No, I think we have got in our portfolio, as you would expect, with 56 companies, quite a range. We've got some who I think are out and out leaders in ESG already. And we've got others who are, I would say, curious about what this means. And
who are, not naming names, who tend to be the sectoral laggards and why?
I think the sectoral laggards are those that have less of an obvious environmental and social impact. So those companies that have got manufacturing or are consumer facing are already very switched on to this journey. Those that are more B2B, perhaps more, tech, have less obvious environmental impacts. They're the ones that are beginning to think, right, so this feels like the right thing to do. Jenny, what do we do?
Right.
Others are already well down that route.
I think that's such an interesting point. Why don't we go on to that? Simon, what do you say to the tech company that's sitting there in their smug armchair saying, well, we're software, aren't we? We're basically working from home. Clean bill of health. Push back on them.
I mean, simply that I think you've got to get under the bonnet on a lot of this, and taking examples of tech companies. Are they? I mean, whether it's in-house or external data center hosting, you need to be looking at that. Yes, it's an industry that's a lot of progress on things, but they've also got a whole plethora of other services that they're receiving. It may not necessarily be product-based, but their supply chain is full of service providers, many of whom have their own carbon footprints that may just have as little management as some of the product supply chain does. And certainly our experience of going through it with tech companies is there's an awful lot to learn and an awful lot under the bonnet that does still need to be attended to. However much you can kind of go, well, Microsoft or Google or whoever have committed to certain ambitions around net zero, it doesn't remove the fact the challenge is there. And ultimately, so many different parts of this are about the internal culture that you're building or about the leadership decisions that you're making.
Yes.
And those aren't something you can outsource. So you've still got to go on a journey.
Okay, so let me ask you a question. Rob's got a good example that he's shared from Revolution Bars of where they've written it into almost the terms of engagement with a supplier that if you don't hit these marks, we're not going to work with you. All very well. What about if you're working with an enormous company that you sort of have to do business with? Where's the power? You almost need to become a, judo player. I'm trying to understand how this plays out in reality.
I think there's two parts to that. One, I think there is still value in the collection of companies saying to the big organization, this matters to us, because if they hear it enough, every little helps. I also think there is a different way of approaching it in individual sectors, and Rob, I'm sure, can allude to this, which is that there is a sectoral approach to it by building a relationship with your contemporaries. If you've got a significant influence over a supply chain partner as a sector, then talk to your contemporaries because they've all got the same problem as you.
Yeah, pause briefly, Simon, for me. Chris, Rob, is that happening in reality? It's a nice idea. Are you finding allies?
Absolutely, certainly from a hospitality point of view. So we were a founding member of the Zero Carbon Forum, which was established to bring the hospitality industry together on this. That network is growing all the time. Most of the major companies are now involved, and we're bringing more companies on all the time. So
thank you
very much so.
Thank you. Very briefly, Chris.
I mean, I think the things got put on shelf during lockdown, and in the last 6 months, I've seen a tremendous amount of movement on large companies looking to make positive adoption on environmental products.
Yeah. Now, just briefly, because Simon, I want to talk to us about, how effectively the rules are changing on this. But very briefly, Jenny, when you're running the ruler over a company to invest in, what metrics are you using? You talk about how your role is shifting from risks to value creation, but how are you evaluating all of the good things we're talking about today?
So the way that we do that, it will differ for every firm, but a lot of the time what we are looking at is whether or not they have got a policy in place to address a particular issue, whether or not they've got measurement on the back of that, and then what their performance is around it.
Got it. Okay. And then those are sort of checks that you run internally. You don't use a sort of independent auditor.
We use a third party. Yeah, so we'll use an ERM or similar to conduct that for us.
Yeah. Okay. That's really helpful. Okay. Simon, why don't you sort of sneak off to the side with me just briefly, because I've got quick questions for you. By the way, first of all, tell us what's coming down the track at these companies that they have to abide by and how the landscape's shifting. Sorry to get all serious about it, but we need to know the lay of the land.
Yeah, I think you've always historically had a kind of regulatory set of requirements, market expectation of best practice, and then things that leaders do. And what's happening is that things that was in the leaders do is becoming market expectation or best practice, or in fact, in some cases, is legislation. And that shift of the fact that there's a whole series of things that some people have done, but now everybody needs to. And look, what Rob alluded to there in terms of expectations through the supply chain is a big part of this for certainly smaller businesses, because you're almost a license to operate issue is going to come down the line. There's certain sectors where I'd take insurance as an example, where some of the big insurers have said to the supply chains, if you haven't got committed to a science-based target in a certain time frame, you won't be part of our supply chain. And
just remind us, and forgive me, our viewer might be like ridiculously clued up on this, but just remind us when we talk about an example of a science-based target and how that matters in practice. Top example.
So taking that as an example of the many pieces of lingo in this world, a science-based target is basically taking climate science, so the academic research and the UN reports that sit behind it, and basically saying there is a certain pace of reduction that's all required for us. In a nutshell, you're talking an average of somewhere between 5 and 8%, depending on your sector, per year as a reduction. The best way I like to describe it is the carbon. If you take Moore's law in computing, a carbon law, so if you halve your emissions every decade and then assume the residual needs to be offset, you're roughly there or thereabouts. The science-based target actually needs you to be less than 10% of your original emissions. So you need to go slightly further than that. But ultimately, it's basically saying we are reducing our emissions in line with climate science. And that's obviously critical.
So it particularly pertains to the amount of reduction in impact in carbon footprint.
It's about acknowledging that we can't do this purely by offset. So we have to reduce our emissions. Therefore, it's a measure of decarbonisation.
Right. Tell us more about these disclosures. What's nice to have and what must be done, and how's that going to change?
So you've got a whole series of pieces that are regulatory, things like for a whole group of businesses that have large accounts, then you have to declare your carbon footprint. You'll have schemes like ESOS for where you have to regulatory energy audit every 4 years. But in terms of where it's actually kind of moving the needle on climate change and the schemes that are there, we've got TCFD, which is kind of recently in. So that basically means you have to present the governance approach, your strategy, your risk management, and your metrics and targets behind climate change in your annual report and accounts. And
that's pause briefly for me. So this is TCFD, the Task Force on Climate-Related Financial Disclosure.
Yes.
You have to put it in your report. Who else do you have to tell about that? And who does this apply to today? And will you predict it apply to in years to come?
So the Treasury has already stated it will be economy-wide in due course in policy papers. So like how that is transposed, I'm not entirely sure that
for micro businesses.
I think it will be an element where it's not the same disclosure, but I think in due course there is an expectation that some elements will be disclosed. I think certainly if you read kind of policy papers, there's an expectation of a micro version of the same. I suspect just carbon footprint, if I was to kind of estimate. In terms of what it means, disclosure, it's legally required in your annual report and accounts, but investors would expect to be able to see it. I certainly know that organizations that are kind of refinancing or whatever it is, that banks are kind of like, how are you progressing on TCFD? In terms of who it impacts, any main index listed AIM company, listed company with over 500 employees, or if you pass what's called the 500 test, so you're over 500 million turnover and 500 employees, and that applies to LLPs as well in terms of scope. So.
No, got it. All right. And what about the so what factor? If you and I get on the wrong side of the tax man, we could go to prison. What's going to happen if we get this wrong?
I think the enforcement regimes they're not hugely scary, though there are penalties in terms of pieces. It's an annual report and accounts requirement, so any director should take it seriously in terms of that particular one. I think there is a wider question here about corporate reputation, and I don't just mean business to consumer reputation. I mean your business to business one in terms of trading and the supply chain point we talked about.
Yeah,
there's an access to investment and access to finance, reputational risk as well.
Yeah, really helpful. Okay, while I've just got you just for 1 minute more, thanks for throwing me under the bus with Jenny earlier, by the way. What haven't we yet asked these three that we must ask them now?
I think what's the number one thing they feel needs to be changed in their organization? So what's the next step for them?
Right. God, you're a tough taskmaster. Right, let's bring everyone back together. Okay. Jenny's not expecting me to start with her, you see, on this. Jenny, how are you going to be the most, sustainability friendly, tough love investor out there? How's Inflection going to do that? What are you going to do to make sure that happens in practical terms?
So I think the big change we're making is, rather than having a single approach to our portfolio, looking at metrics at a portfolio level, we're being really clear on what the end game is and what good looks like. So we're focusing on individual companies, setting a framework for the whole portfolio, but with different routes for different organizations. So a company can do what's right for them in their operating environment and not focus on a siloed approach to data management.
Right.
I think that will set us on our way well.
All right. No, thank you. Now, Rob, we'll talk about your and Chris's to-do list in a second. When we talk about disclosures, about measuring things, tell us how that affects you as a leader and how you view all of those things, and be as blunt as you like.
Well, look, it's very confusing. So actually, I outsourced most of that to Simon, so he could put it in layman's terms for me. But no, internally, we've made someone responsible in the business for it. So I guess that's the key. And then, so we've got real ownership at all levels, and then just disseminating that through the organization, because it is very hard. All the acronyms, all of that, you can get lost. But ultimately, what we want to do as a consumer-facing business is make real change that then Simon can tell me on a quarterly basis, your carbon footprint has come down by X. So I know that we're currently 22% down on our carbon footprint since 2019 when we measured the baseline. So quarterly, I get that information, and then we look at what actions we're going to take for the next.
And just remind, and very briefly, congratulations, you've won awards literally for that work as well. What are the main changes you made to reduce that carbon footprint across your sites?
The biggest one, and what I would suggest is, you talk about investing and payback and how do we do this profitably. As a consumer-facing business, multi-site retail, energy is horrifically expensive. And so being able to reduce our energy consumption by 30% by taking some very easy steps, monitoring our out of hours consumption. So why are we using power when the building's closed, etc., and really highlighting pieces of kit that are taking too much energy, and then investing our capital in buying fridges and freezers that are just the most efficient on the market and all that sort of thing. We're basically making profit whilst also saving the planet, which is, I guess, is what this is about.
Love it. Chris, I think our viewers love it when we just get these practical examples in. Give us a few more from Cheeky Panda, changes you've had to make.
For me, B Corps are really good certification in terms of tracking and measuring like what you do. I think for me, ESG isn't a tick box challenge. It's about real impact. And I think, from Cheeky Panda's point of view, by people using our bamboo products, we've saved 250,000 trees. We've reduced the category carbon in the category by 31,500 tons. We've reduced plastic by 20 tons in the category. And if we know if we're going to hit our growth targets in 3 years' time, we're going to save 3 million trees. We're going to save 300,000 tons of carbon. We're going to save hundreds of tons of plastic. And I think that, we can kind of get caught too much in like the percentages and actually forget about the wider impact. And I think for us as a business, that's what we major on, is actually, we're actually making a huge environmental difference, and we should make a bigger one as we scale.
Yeah. So for the uninitiated, in 1 minute or less, remind us what's a B Corp and why is it so good to be one?
B Corp's basically the same sort of standards that you would expect of a public company. And what it does, it puts that governance framework in terms of monitoring, tracking, reporting across, your building, your staff, your suppliers. And that means that you've got really strong foundations as you grow. And see that you don't get to a 100-person size company and then you've got to re-engineer everything because it's already built into the core.
That's interesting. So there speaks an entrepreneur with ambition. Any downsides?
There's always risk. I think that through this business that we've been in, we've seen FX crash, we've seen supply chain issues, we've seen commodity prices shooting up, we've seen wars in Ukraine, it's getting COVID. for me, that I think until the planet gets right with itself, we're going to be launching from one crisis to another crisis. So it's all about being like, ready for the next challenge, and running your business in the best way you can.
And forgive me, Chris, that's a great answer to the broader downsize question. On the B Corp specifically, any Achilles heel?
It takes time. For small companies, the resources that's required to implement B Corp, it takes about a year, and then to manage it on an ongoing basis. But like I said, if you are a scaling business, the benefits it will give you will massively outweigh the time and effort it takes to put it in.
Yeah, Jenny, B Corp's crossing your path. What sort of signal does that give you? Any observation?
Yeah, so absolutely. I think B Corp is, for me, it's the gold standard for ESG practice. So in terms of targets, everything that's already got B Corp certification, definitely interested. And likewise for our portfolio companies, that's something that those that are more advanced or more ambitious, it's definitely something we'll be recommended to.
Okay, thank you, Jenny. Now, Rob, here's a blunt question. To what extent does being a listed company help or hinder you from or against becoming the most sustainable company possible?
Well, look, a couple of things on that. Some of our larger investors, some of our institutional investors are absolutely aligned. And one of the reasons they hold our stock is because of our agenda on ESG. So, and that's been a recent thing over the last couple of years. So, and we're seeing more and more of that. So I think in that aspect, it's positive. In others, probably less so, where there is some pressure on quarterly results and annual results. And as I said, there are some quick wins to be had, but a lot of this is investing now for benefit over the medium to long term. So you've got to sell the story, not just of the business, but of your ESG strategy to your investors. So as they believe in it and they want to be behind it for the longer term.
So who, Rob, is your biggest skeptic, and what's an example of where they have a point?
It's a very good question. I'm pretty pleased to say we don't come up against a lot of pushback here, either from investors, from guests, from our internal teams. We really don't see it. I think it's hard to argue with a business who is trying to balance creating fun and memorable experience for people on a night out and actually doing the right thing by the planet. So, I've got to say I haven't got an answer for that, because we really haven't come across a supplier or anyone who's not been aligned with this. We've had some tenders where we've dealt with businesses which haven't been interested, but we've not actually engaged with them. But
when push comes to shove, and an investor, I'm not talking about your previous results here, but hypothetically, an investor looks at profitability and says, Rob, we're seeing a shrinkage here. We're not happy about that. And you start to explain that it's because you've changed your heating provider, because you're, making some other changes to the business, short-term investments for long-term gain, in your words. And they say, yeah, but I'd like the profits to be bigger.
Yeah, and look, and that is a boardroom discussion that is ongoing most months, where we are, it's got to be a balance. You can't run, we have this sort of mantra internally, you can't run ahead of your guests, because if you start changing too many things, then suddenly you've got an empty bar. So you can't, and the last thing they want to do is be reminded that the planet's, slowly dying when they're coming out to forget their woes from a busy day in the office or what have you. So you can't run too far in front of your guests. You can't run too far in front of your investors either. And therefore we have to balance. We are paid to balance or create the right balance between investing for the future and delivering profits now. So, that's on me, I guess.
Right. So no pressure and everything. Chris, what role do your customers play in becoming a more sustainable business?
I think our customers actually help drive innovation. So they come to us and say to us, we're looking for these types of products. They don't exist. Can you create them? And I think we created a flushable hand towel for the Treasury because they kept getting blockages. And because we knew that our toilet tissue broke down, we played around with it for a couple of months. So we actually
the Treasury.
Yeah, we supply quite a few government buildings actually.
Right, they weren't trying to flush away important documents, I hope.
Well, maybe that's why it was blocked. No, but I mean, I think that was a great example of when a client's come to us, and I think the straws as well was another great one. Is we were having like, Brewdog came to us and said, we in our slush puppies, by the end of the slush puppy, the straw's falling apart, and because bamboo fibers are longer, they're stronger, and they don't break down. So if somebody's, and I always kind of had this argument, if I'm spending £10 on a drink, the last thing I want to be doing is halfway through changing my straw, and it's not very sustainable to keep using more straws like that. So we found that our straw business in particular has been something that our customers have asked us to innovate. We've innovated with it, and now it's, we've got huge success across a lot of very, very large clients.
Right, this is brilliant. You've already got the coffee meeting off the back of this with Rob. Don't worry, that's already in the bag. But thanks for our news flash of the day, which is the sheer amount of waste leaving a government department was so much you had to innovate off the back of it. I mean, absolute shock horror. Jenny, what haven't we yet talked about? Because I'm very interested in the role an investor plays once you've invested. And Simon, please come in on this bit of the journey, because in practical terms, these chief execs are running companies. They're up against all sorts of inflation pressures, geopolitics. I mean, it's tough, right? So how do you help and not hinder?
Yeah. So, it's I'll go back to this idea that it's not a one size fits all approach. So we're not about imposing, a set of standards that need to be met within 12 months. It's about talking about one thing that always perks up the ears. It's about making a strong exit. So what does this business need to do in the 5 years that it's with Inflection to make sure it secures a strong exit? And that will be different for each and every company. At the base level, it's about managing risk. And sometimes that's all they're wood to do, and it's all we will do. Keep them out of the courts and keep them off the front pages. Make sure they're meeting the regulations, license to operate issues. For others, it's more about innovating around value, different products, different services. What could that journey look like?
Yeah.
And another stage is looking at impact for very mature companies and going into things like B Corp.
Right.
So it's about doing what's right for each individual company, not imposing a blanket approach on everybody.
Okay, so let me ask you all a few. We'll do a sort of quick fire questions here, and please all come in. Just show me if you'd like to come in. What do you say to the leader who says, "Look, I get this. My chairman gets this. God, it's like practically like working with Al Gore. The problem is our employees and taking them on the journey. How do we do that?" Go on then, Jenny, then Rob.
I'd very quickly say ask your employees, because you may be just asking them the wrong question.
Yeah, look, we've got 3,500 employees, and they drive a lot of this. We've got a zero hero in every bar. They're the ones that come up with the ideas. They are the ones that can impact it the most. Then we get to scale those ideas. And from an employee engagement point of view, which was mentioned before, look, it's hard to disseminate. Is this exactly what's driven it? But we've done an employee engagement survey, 86%, highest we've ever had. And that's on the back of the year we've done the most we've ever done on ESG. So, I would suggest based on that, it's a very good thing to do for retention and recruitment.
So tell me about those. Sorry, Chris, I want you in 1 second. But on those zero heroes, great name. What's your attitude to scaling innovation through the business when you know that some of the best ideas may only be best in that particular area?
Well, I guess because we run a brand...
By the way, maybe that's absolute BS. Yeah. By the way, maybe good ideas for Revolution are good in every bar. You push back.
Yeah, that's what I was going to say. We run a branded operation, so what's good in one bar will be good in another. And like I say, it's just surfacing those ideas, and then we can roll them out at pace and at scale.
Have you got some examples of that, Rob?
Well, the passion fruits came from the ground, the pineapples came from the ground, and then equally some innovations around cellar cooling. So, what can we do? They highlighted that as a big area of concern. It runs 24/7 basically, and we've managed to find kit that will monitor it and turn it off when it's not in use, etc., etc. So a lot of innovations are coming from that. And again, things that we were we sell an awful lot of cocktails, as I alluded to before. We were importing lots of plastic from China that was garnishing these drinks and all that sort of thing. And basically they said, look, we don't want to be selling cocktails to guests that have got all this plastic in it. Yeah. So over the course of 4 years, that's completely been removed out of the supply chain and our drinks, therefore.
So while we're on you briefly, Rob, the single biggest thing on your to-do list then, the biggest single internal challenge you face?
The biggest single one is that supply chain. It is getting all our suppliers to deliver against their commitments to us.
What sort of supplier have you got in mind as you're telling that story?
Well, it's largely food and drink. So we've gone 100% renewable energy, all of that sort of thing. So we've done a lot. But I think it is really, how do we electrify the wheels on the road for bringing all that stock really is a big one for us. So if they can get electric vehicles delivering, that would be huge for us.
Great. So we've got, Chris, do come back in on this, by the way. We've got about 10 minutes left. If you've got questions, do fire them in. Hopefully we've been doing a reasonable job of getting lots of questions to the team. Chris, did you want to build on what Rob was saying earlier, particularly around customer innovation?
I want to build on the boardroom discussion. And I think one of the big shifts that I saw a couple of years ago is that boardroom pay is also being linked to, and bonuses are being linked to ESG performance. And we've seen in the last sort of 12 months, where people are sort of sitting at lower middle management levels, we're almost afraid to put forward ESG solutions because of the price changes. And we've had in the last sort of 6 months several instances of very, very large businesses have turned around and said, well, I looked at it a couple of years ago, but now it's on our agenda, and now we'd like to revisit it. So I really do think that the confidence now that's sort of filtering down from the sort of senior team. As I said, actually, we are looking to make changes, and changes we're looking to do are good. And now sort of the sort of management and the staff are now feeling confident that they can propose things without getting, for want of other words, shot down in flames.
Right. Who are your biggest skeptics, Chris?
Biggest skeptics are, I think, probably like Rob. I think a lot of the people that we work with and partnership with are actually, we're working in partnership. So I think sometimes the investment community can be a little bit skeptical of, like, why doesn't Kimberly-Clark do this? Or if it was that good, Kimberly-Clark would have done it, or SCT would have done it. And my answer to that is the big companies find it very hard to change. But I think that's probably the hardest thing that we have to address. And, hopefully we can inspire a change in the industry and be a leader in that change.
I think just
please, Simon.
Just going to jump in just to summarize. I think the headings that Jenny used a few minutes ago of risk, value, impact. I think just linking in what Rob and Chris have been talking about, a big part of the reason other organisations don't change or push themselves forward to act is they haven't seen the risk. A big part of our initial journey with organisations is to do an education journey to give visibility of that. There's clearly value in businesses. What Rob said about both profitability in terms of that there are things which are cash generative or profitable out of this, but also an engaged workforce is a positive thing for any business. But I think if you're also having a business model that's having an impact, that creates value for any business, and I think it also supports the planet. So I think like the biggest thing that I think is often a barrier to this is almost unseen risks within a business, and the value you can derive out of them.
So without spooking our viewer, what's an example of a hidden risk that you've managed to uncover, and preferably an example of how it's led to a change in action?
So there are many times, and taking what Rob said about food and drink, there are multiple examples where, by analysing the journey of food and drink supply, we've highlighted that there are parts of that supply chain that just like, hang on a minute, why is it going from that country to that country? Why is it air freighted? Why is that organization conducting what seems relatively inefficient? Why is there an extra layer of packaging that just seems wasteful? That doesn't just strip carbon out of the supply chain. It can also highlight a social issue, but it can also reduce the cost of operation for your supply chain, which ultimately actually derives value for you, because if they've got a lower cost of operation, that should ultimately flow through to you in the end. So I think quite often starting to look at supply chains through, Chris alluded earlier to life cycle analysis, which is the technique you'd use to do that. That can often highlight a huge amount for an organization. And actually kind of Rob taking the example of passion fruits earlier, that technique was used for that very project. So
yeah. So we've talked quite a bit, Simon, haven't we, about quick wins? What are the sort of bigger wins, if you like, that might require time, that might require investment, but are absolutely needed? Because I want to almost go to the other end of that spectrum. Give us an example.
Yeah, I think you're ultimately in a situation where kind of you have got to look at the way your own direct operations are set up, and there's often an ability to invest quite a lot of money in that, but get a return. So I think there is a real tangible investment strategy that can be done there. But the biggest single part of this for almost any organization is their supply chain and how they interact with the rest of the world. So I think a lot of investment has to be about how you're looking at procurement and how you're designing, but it's not always just about purely the commercial elements of procurement. It's sometimes about how you design your product. And Chris, the business model for G-Panda is a great example of that, where you're looking at how doing something differently is actually part of where the value gets created.
Right. And maybe Simon and Jenny, just how there's this one thing that's really lingering on my mind this particular episode, which is I totally get Jenny's point that says we treat every company differently because every company is different. At the same time, I'm trying to square that the idea that we need common language. We need to be able to compare apples with apples. So Jenny, speak to that briefly, please. And Simon, help me understand, because I like to be able to compare things, and a spreadsheet or a P&L helps me do that. Why can't you? Jenny first.
I would say that, those portfolio-wide metrics that our investors are demanding of us, by the way, it's not necessarily putting them on, they're never going to go away. They're about risk management. They're about comfort. They're just about having the data to hand and knowing it's there and ticking a box. None of it is going to drive any value. So the idea around measuring value, at best, can be done at a sector level. It's likely to be done at a business level. And therefore, I say we're adopting a different route that's about framework, and we will be reporting on progress through that framework, as well as the individual metrics, because those metrics are not going to grow the value that we're aiming for.
No, and a fair comment. Simon? I
think we've alluded to it a few times. There are schemes and disclosures that need to be done, and they're important, particularly important in certain circumstances. But they are created to figure out where we can all disclose with the same commonality, as in our carbon footprints, what risks we categorize as, and that kind of thing. But the reality is that actually, where the value gets derived, where we manage this, is leadership decisions and how an organization is led. And actually, kind of linking back to all the different comments that have been said, and the point that about it being bespoke to each organization, the decisions you make as the leader of an organization are individual to that organization. Yeah. So there's a performance question. There's a performance question about benchmarking, but within an organization, it's about how you lead an organization on that transition.
Got it. No, thank you, Simon, and thank you for your work at Energize. Now, for the other three of you, Rob, Chris, and Jenny, a final thought on how our viewer can ensure that sustainability is also great for business. Jenny, Chris, then Rob. Very briefly, if you will.
Think about shared value. Look for the opportunities. They will be there.
Love it. Chris?
I think for me, if it makes sense, then do it. If it's too complicated, then there's probably something not right with it. So keep it sweet and simple.
Love it. Thank you very much. Big kiss to you. Thank you very much, Chris. Rob Pitcher.
Yeah, make it a priority, number one, and then start small. Just get some quick wins on the board. Just do something small, see the effect, and then that will amplify. So don't try and save the planet in one fell swoop. Just start small and build from there.
Love that. Channeling, journey of 1,000 miles and all that. Love it. And Simon, I will come back to you just for a final thought. You've been rightly praised by Rob at Revolution on this call. So something for the viewer to take action today, maybe.
Yeah, I think a summary of all of the points. I think start small, make sure that it keeps it simple, but also just kind of take some action. I think the biggest challenge for some organizations, and it's the only bit I'd add, is some organizations are still stuck in a situation where it almost there's no action. And I think take a step forward, because I think there's still many organizations that are at the beginning of this journey.
Brilliant. Now, if you're watching today and there's someone you think should see this recording, please do share the link with them. But let me say a huge thank you to all of our guests. Can I see them again, by the way? Are we allowed to see them? Are we out of time? I just want to wave goodbye, that's all. Jenny Galbraith, to Chris Forbes, to Rob Pitcher, and to Simon Alsbury. Thank you so much for joining us. That was 100% sort of first class from all of you. Thank you so much. Really good to see you. Keep in touch. Right. And my final thanks to you on behalf of FinCap Group, whether you're listing your company, whether you're selling your company, whether you're raising money for your company, please do talk to colleagues at FinCap Group. And as I say, if you've seen something in this hour of conversation that resonates, that you think a colleague should see, please spread the word. Let's keep this conversation going. Let's keep the action going one step at a time. For now, I'm Oli Barrett. This has been a conversation about sustainability, driving value in business. So until next time, goodbye.